Hang Seng, which is sitting with gains of around 0.4%. Taiwanese index, which was in the red just a while back, has actually recovered.
It seems to me that if they really want to do something and have some effect, they've got to have much bigger jumps.
While yesterday was a good risk reward, now you are in a parabola, and I don't know how you enter that, because if you want to chase it on weekly options expiry day, as a day trader, sometimes it can be risky.
So we do expect that this year we should have an order intake of 19 to 20,000.
Maruti is all set to make a solid comeback. They have very promising new launches and they're seeing a very good response for the new Brezza.
The Nifty is now up 81 points. 18,080 is what you have. A bit of a short squeeze, this one.
Global factors have not really worked in the market's favour, but it's just overcome them. And
there was a 50% participation from domestic mutual funds, and I believe one of the domestic mutual fund was an anchor investor as well.
These are pending, as I said, in different courts of law. That has to be, but that has nothing with the business of the bank.
We are willing to partner with you. We are willing to help you find a more sustainable solution.
Bank Nifty has seen, after an outperformance, it has slipped into the red. That one is down 66 points.
Good afternoon and welcome to Closing Bell. I am Anuj, with me, Prashant and Nigel. Today has been a much more, sedate day compared to what we had yesterday, of course, especially on the Nifty. It's, of course, been very volatile, because it's weekly options expiry. So the market's moved in a band. It's a big band, 250 points. But, for last 2 or 3 hours, the market's been rather stagnant around the current level. The Bank Nifty, of course, has seen buying on every dip, which is something which clearly stands out. But today has belonged to the broader market. While yesterday was all about the recovery in the Bank Nifty, today is all about what's happening in the broader markets, and really two themes stand out. The biggest theme is tire stocks. Just look at how some of these stocks are moving. I think a couple of them have actually hit circuit. And the other is city gas distribution stocks. So as a theme, these two stand out, but there are many, of course. Prashant, Nigel, hi, good afternoon.
I thought, Anuj, they were talking about mandating seat belts, at the back. The way tire stocks are behaving, it looks like this. Two additional tires. I mean, that's making a small joke, but absolutely crazy, right? I mean, 20% on CET. And you look at other names. I was just looking at MRF, which is up 6%. You will look at Apollo Tires, which is up 6%, 297 on that one. Even, of course, I mean, the down and out Balkrishna Industries is up about 3.5%, 4% or so. So that's, the entire tire space, which seems to be doing very well. And the market itself has been oscillating. It's been down 130 points. Then it's cut its losses quite sharply, down just about 75 points. The fact is this: over the last 2 days, and this is very, very near term, the US market is down 4%. Yesterday and today included, we are down not even 1%. So that's basically the extent of the outperformance on pretty much any time frame. You stretch that time frame and the numbers look even starker. So that theme very much continues. Nigel, hi.
Well, hi. And the other theme that continues to play out is the mid-cap, small-cap cement names, right? You have Sagar Cement suddenly up close to around 6%. You have India Cement as well that's running along. So let's see what the Adani Group has to announce in terms of a fundraise and what are their plans in terms of utilizing it. But it seems for the time being, there's a bit of a game out there. Most of these mid-cap stocks, they are running up in anticipation that something's got to give. And maybe one of these potential targets could get picked up. For the time being, there's no official confirmation, but we've seen this the last couple of days, and today it appears it's a couple of other names that have cropped up suddenly on the list, while some other names, Orient Cement has cooled down a little bit. You have Kesoram Industries as well that joined the pack today. So let's see what goes on, but that's clearly been the space of this week. Well, plenty to talk about in the next 1 hour odd. First up, let's run you through what we have lined up on the show. Indices raised the morning gains with the Nifty and the Sensex, trading with cuts of close to around 0.5%, financials trade flat and come off record highs. The mid-caps outperformed today. CET rooms ahead in trade on a bullish note coming in from Nomura. Details coming up on that front. Gland Pharma on the other side sees a sharp correction. What's triggering the fall? We'll get you all those details. And we'll also get excerpts from the chat that we had with the Home First Finance on the show. Remember, the management spoke to us just an hour or so ago. They denied reports of PE fund selling stake in the company. And finally, Pashupati Advani of Global Foray will be joining in to help us decode the volatility in the markets as well as the road ahead.
Okay, but as always, we start the show. By the way, the bank Nifty is once again in the green. It's been that kind of a day. Mitesh Thakkar is joining us for last hour calls. Mitesh, good afternoon. A bit volatile today, but broader market is showing strength. Your views and your 2:30 calls.
That's right, Anuj. I think mildly volatile. As we discussed in the morning, I think the bank Nifty between the two indices is doing better. Both the HDFC twins, which carry significant weight in the bank Nifty, also look good. So I think financials might enjoy a good momentum for the next few days, while Nifty still might, consolidate. The key here on the index would be the low which it made today. I've talked about 17,850, 870 as the support pivot. I think today we got a low of around 17,860. And I think if that is held, then I think, we'll just chop around for a couple of days before moving up again. In case we see a break below that, then I think there might be some more correction happening over here. And we could possibly drop down by about another 100, 150 points before stabilizing. So overall stand is still positive. I have bias on granules. That's a buy with a stop at about 312 and a target of 330 on the upside can be looked at. And Btsd, Power Finance Corporation, is also breaking out. That's a buy with a stop below 115 for targets of 122.
Okay, all right. So that's individual names there. Let's just put up CET. CET is a RPG Group company, and we'll talk more about this with our colleague in a bit. And RPG had its analyst day. KEC, for example, is a company we spoke with. That's a RPG Group company. We had the management with us earlier in the morning. CET did, it was higher, but even till about 110 or so this afternoon, the stock was at about 1510. It's basically gone up like a rocket post 1 o'clock. Now at about 1660. So 150 rupees on CET in the last 1.5 hours. So that is basically what is quite incredible, given the fact that, the meet was yesterday. It's not as if this was happening during the course of the day and then stock started to move higher in response to commentary which was coming through live. Let's put some of this to Prakash Diwan, who's joining us. Prakash, great to have you with us here. Thank you very much. What do you make of this? 20% on CET?
Good afternoon, Prashant. So, I think it's a catch-up trade on the entire sector as a whole, and particularly CET after the management has kind of, some sort of assuaging of the negativity around it, the kind of expectations that had got tapered over the last many quarters. That has kind of got, changed. So CET has been facing a lot of issues because of margin pressure, and of course the fact that it needs to deleverage and get out of this whole interest cost burden. Now all of that seems to be something which the management probably has a plan to, and that's what's been shared in the investment meet, and that's where you see that spike, that the return of confidence in the business is very clearly demonstrated on the chart. Let me also tell you that this whole catch-up trade. Autos were doing well, some of the basic ancillaries were doing well, tires were the only pocket that was kind of left out of sorts, and it's kind of now playing catch-up. Everybody's talking about OEM growth, OEM-led growth, but pressure from Europe. So, it's a fine balance that's being talked about. There's a lot of hope trade also involved in that. My sense is the better way to play tires is to go with the carbon black players. And you have a brilliant company. One of my favorites in that is Philip Carbon. It's of course not the only player, but the kind of capacities that it is building up, and 73% of its revenue comes from tires, right? So if tire companies have to grow, there's no reason why a carbon black company cannot do well. And China has been facing a lot of shortages on supply. So the import substitution is also a very strong theme that's working in favor of PCPL. I think it'll probably be a much more all-rounded growth rather than just try and bet on a particular tire company.
All right, got that. Interesting.
I got to get new tires for my cars. I was just thinking, how do you decide? It's always it's an interesting thing. How do you decide which brand to go in for? Right? They're all tires. Of course, it depends on the make of the car. Some cars come with certain sort of make, So you go in for, you just replace them. I mean, whatever you have going for the last couple of years, you replace them. But it's a at the end of the day, it's a commodity space, right?
Yeah.
But they're increasingly, as is happening across the board for a lot of commodity businesses, they're trying to brand it.
Yeah.
Right? Branded commodities. So that's something which CEAT is trying, MRF is trying, and of course others as well.
You know, there was another way to play this tire story as well. That is this Rajratan Wires.
Yeah.
You know, I recall the company was only around 350 crore market capitalization, but we are at CNBC-TV18 close around 5 years ago or 6 years ago, I think. We put out a piece on Rajratan Wires. You know, today the stock is down 2.5%. But if you look at it in the last 5 years, it's gone up, I think, from around 3,000 crores. It's gone all the way to from 300 crores to 3,000 crores of market capitalization. And why is that? Because they supply the bead wire, and they have a market share of close to around 50%. So if you want to play the tire theme, an indirect way was to play it via this, and the other one that Prakash suggested was Philip Carbon Black as well. So you know, just thought I'll point that out as well. But speaking about tires, well, CEAT, that's the one that's at 52-week high. Sonal is with us to run us through what's driving the stock higher. Sonal.
Thanks a lot for that. Well, there were some positive takeaways from the CEAT's investor takeaways, and they say that demand in the near term is going to be really strong, and near-term volumes will be driven by strong demand, especially in their original equipment segment. Exports, however, they think will remain subdued in the near term. However, growth will be driven by exports in the longer term. The near-term issues is something that could impact growth there. Rural demand is relatively weak across the replacement and the original equipment segments, both of them, and it is the European demand which is witnessing some headwinds, and dealers are not stocking up because of that. They speak about commodity prices as well, which have increased around 2 to 3% on a sequential basis. But despite that, they expect margins to remain stable on a quarter-on-quarter basis, and that is, of course, the biggest takeaway there. CEAT aims to go back to 10 to 12% margins versus 6% margins that they reported in Q1. So a big margin push is something which is exciting the stock today as well. FY23 capex around 900 crore rupees, 500 to 600 crore rupees in the second half of this fiscal is what they expect. And by FY26, they expect to gain leadership in 2 to 3 wheeler segment and also achieve leadership in passenger car radials. On the back of this, Nomura thinks that EBITDA margins will improve from 6% in first quarter to 10% by FY24 and 25. They have a neutral rating with a target price of 1,273 rupees per share. Along with this, the other tire stocks also doing well in trade today.
Okay, all right, Sonal, thanks a lot. So that's one space that is doing well. Well, let's focus on the metals pack, and the metal stocks are under some pressure. There were two factors that played out overnight. One is on Alcoa. Alcoa was down close to around 10% odd. The company sounded circumspect on aluminium demand going ahead at a presentation that was made at the Morgan Stanley conference. So that triggered off that fallout there. So that's on Alcoa. US steel stocks as well, they got hit last night. Nucor, they came out with an EPS guidance which was far lower than what the street was working with. A couple of reasons that they've given is lower margins and lower volumes. Well, Edelweiss, they have written on this, and they said there is some implications for Indian stocks. In fact, they say that domestic stocks are not really correlated to the US steel stocks, but they believe that the grim earnings scenario is likely to play out for the coming quarter. They go on to add that they remain circumspect on the sector's prospects in the near term. So put all that together, you have the metal index, in fact, that's dragging today. Hindalco is one of the top losers. Nalco is under some pressure. Tata Steel as well is down close to around 1.5%. Prakash, how do you play this theme? If the globe is going to go in for a slowdown, then metals normally get knocked. The question is, how much have they already pulled back, and how much of the bad news is in the price? Steel prices have corrected a lot, and I've checked out with a couple of dealers. I believe that prices could be basing out at least on the ferrous side as of now. We'll have to see whether or not demand catches up. But how do you approach the space?
No, absolutely, Nigel. You said it right. The price erosion has been because of multiple factors. Some of them, of course, are being now highlighted, or they have started precipitating more sharply, particularly related to the global demand perspective. But, the trigger was when the government put those bans on exports. Now, if the duty structure and regulatory environment for exports also starts improving, there is no reason why we cannot become exporters of steel to the global markets, right? I mean, it's not just the monopoly that China would have. And recently, one of the conferences on steel that was participated by all the top leading players actually articulated the fact that because we have such a strong assurance on the supply for iron ore, and the process for steel production is still very much within our means in terms of power requirement, in terms of labor, land, all of that. There's no reason why this could not become a big supply side, kind of a favorable supply side situation. And that's exactly where you will find some upside, but with a little bit of a lag. So metals have gone through a price correction. They might have some sort of a time correction also. But I definitely believe that there is very strong future for steel companies, especially of scale, and who have the backward integration also in place. So just go for that, start accumulating in this phase where all the negative news flow is coming, because Alcoa or Nucor have nothing to do with what we could do from our companies, right? So that's the kind of potential that we have, but it'll take some time. And this is a great buying window that you're getting.
Okay, so that's on the metals pack. The market is still quite all over the place. Today is very volatile. The bank Nifty went above 41,500, is back below that. And of course, in the bigger stocks, Infosys, the last 2 days, Infosys has taken it on the chin. And the rally that we had over the last few days, all it's taken is just 2 days for these IT stocks to give back most of those gains. Just pull out the chart, in fact, of Infosys over a 7-day period. And I think it will show you building a nice rally. It looked like maybe some kind of double bottom was in place. Yeah, there it is. So the entire rally is gone. And if you extend the chart a bit more, maybe take it to a month, I think that will further exemplify the picture a bit more. Just pull out the 1-month chart of Infosys and you would see that. Prakash, there it is, 1 month. It's now down about 10%. That double bottom is almost gone on Infosys. Prakash, we saw a bit of a rally in Infosys, right? There was hope that there would be an announcement of buyback now that the cool-off period is over. Of course, that was just an assumption. But this heavy selling that we've seen over the last couple of days, what are you making of that? Of course, we saw that overnight over the last couple of days selling in US as well in the IT stocks. But your thoughts?
Yeah. So, Anuj, I think yesterday was thanks to some of the downgrades that came up. And suddenly we have this whole thing that the best of best in the IT space are getting downgraded because there's this huge anticipation of margin reduction or revenue cuts, especially on the dollar side. I think it's definitely something which could happen. I'm not saying this is out of the realm of possibilities, but to mete out this kind of a treatment to stocks, on the basis of some expected demand softness, given inflationary pressures in the US, I think it's a bit overdone. So so IT did have a chance to kind of play some sort of a comeback. But tactically, it was the opportunity was there, but probably, I think financials are still weighing heavily in terms of the favorable buy-side disposition at this point, and IT has probably been sidelined and it will continue to be for some time. Specifically on Infosys, if you ask me, the kind of cost control measures that they're talking about, that will start balancing out any kind of a potential revenue reduction or margin pressures. And the company could still announce a buyback. The cutoff is over, so it doesn't mean that they've lost that opportunity. It, in fact, only becomes very imminent as and when they want to do it, they would probably do it. Of course, there could be a lot of other factors involved there. But I think it's at lower levels, it definitely could be something you could go to. Maybe not at this point in time, give it some time, but right now it's not a place to hide in that sense. But I think the concerns are a bit too overdone.
Okay, well, we need to take a break. Prakash, stay on. We have more questions for you. The market is extremely volatile. There are pockets, of course, doing well. The market breadth is in favor of the advances, even though by just a small number. And, of course, we've seen a lot of moves in some of these tire stocks and some of these tier 2 banks as well. We'll take a break. We'll come back, and Pashupati Advani will also be joining us. He's, of course, a big market veteran. We'll ask him what he has made of India's outperformance and whether he is buying anything at current levels.
Welcome back. You're tuned into Closing Bell here on CNBC-TV18. Well, I think we're getting some news that's coming in there, and Delta Corp should be a stock that you should be looking at because the GST Council is unlikely to meet in September. The delay in the GOM reports pushing a GST Council meeting. Remember, this has to meet with regard to this online gaming, casino, horse racing, etc. So the fear was that there will be some kind of, some kind of clarity that comes out, but that gets pushed back a little bit. So maybe Delta Corp should be the stock that you should be putting up. We'll try to get in my colleague Timsy, who's bringing us this piece of news. The stock is up by close to around 3.5% odd, relatively outperforming the market as well. So keep an eye out on that one. That's it. It comes up for you on the screen as we speak. Well, let's focus on a stock that's not doing too well. Gland Pharma, that's down in trade. There are various concerns rising on the parent company. Ekta joins us to run us through all of those details. Ekta, explain it to us.
Thanks for that. Well, yes, Gland Pharma at current reckoning has underperformed this week as well as lost over 40% of its market cap from its 52-week high. Now, there are concerns which are rising on the parent Fosun. Foreign media reports indicate that regulators in China have asked banks, firms to check the financial exposure to Fosun. However, the CFO of Fosun, as per these global media reports, has indicated that these particular reports which have come up are completely false. However, all of this speculation has risen after Fosun was downgraded by Moody's in the month of August by one notch to B1. There were concerns with regards to liquidity, refinancing pressure, exposure to the Chinese property market, which were brought up. Now, remember that Fosun is a conglomerate. It holds stake in various businesses, which includes insurance, hospitals, diagnostics, fashion, entertainment, and it holds around 57.87% stake in Gland. Now, Fosun had brought majority stake in Gland, 74%, in a deal valued over 6,000 odd crores, almost 7,000 crores in 2017. It was eventually listed in 2020. Now, Gland, however, has concerns of its own, which includes weak numbers. If you look at the Q1 numbers, revenue was down 26%, margins came in at around 31%, profit was down 25%. There are supply challenges which the street fears will continue for the company. The company, however, says they are confident in terms of improving growth. There have been issues such as syringe issue supplies, which now seem to have probably eased, and we've probably seen the worst of it. In terms of valuations for Gland, at FY23, the P is 22 times versus 1 year high of 60 times, and 24 is 27 times versus 1 year high of close to 50 times.
All right, Ekta, thanks very much for that. That's Gland Pharma in focus. The market's down about 70 on the Nifty, but there is so much happening otherwise, isn't it? By the way, I was just noticing on CET, which is still limit up, it's traded some 20 lakh shares, a little over 20 lakh shares. And the volumes on it are the highest they've been since February of 2021. So that's, pretty remarkable. The move that we're seeing, all of it in the last hour and a half, backed by pretty strong volumes, more than a year and a half high volumes. Prakash, of course, is still with us. Prakash, any thoughts on some of these names like South Indian Bank, Karur Vysya Bank, which are also making a move today? South Indian Bank, for example, has been up 20% from the morning.
So, Prashant, I think, I don't know if you recall, we discussed this sometime back when, the entire PSU bank pack also had started smartening about 2.5, 3 months back. This is something where we started sensing another trigger or optionality in terms of the M&A potential. It's very clear. The indications from, a lot of the articulation that the government and the RBI have put out in the public domain tells you that their interest is to have a consolidation phase within the banking space, with some of the bigger banks getting stronger and bigger, and some of the smaller banks which could kind of merge with these larger or growing entities. So we've seen that leadership come back to the SBIs, BOBs, CAN banks of the world, and the smaller ones are available for whatever consolidation in whatever shape and form appears. Now, KVB, for Karur Vysya Bank, was very clearly one of those high ROE banks, had turned around, started getting its balance sheet in shape. And from 41 or whereabouts when we spoke about this, it's already doubled, more than doubled. The same thing would happen to some of the other well-run banks. All you need is a clean balance sheet for that eligibility of sorts for the first round of move. The second round will probably involve some repaired balance sheets as well. But the first round will have that. So from that perspective, these smaller banks do offer a huge opportunity, but this is for the patient investors, who have the gumption to hold on and sit tight for some time till those things happen. But I expect a huge, interesting round of consolidation that could get triggered within the banking space, which highlights the potential for these smaller banks.
Okay, Prakash, that's a good way to end the discussion. Thanks a lot for joining us. Have a good evening. That's tier 2 banks, and yes, Karur Vysya Bank clearly has done well, along with so many others. You've seen a big move in Federal Bank, for example, City Union Bank, and even in the PSU space, Bank of Baroda has seen a big move. Pashupati Advani is joining us now. Pashupati, hi, good afternoon. What's happening with banks? First, let's start with that. No matter what happens, bank stocks are just going up.
That's my concern, because I guess people are running away with loans, and so far the loans are getting serviced. So everybody's smiling. If there's any kind of a turn, then you'll see it. The RBI has done a positive step by attacking the NBFCs, and I think they're going to go through those. But then the NBFCs' bad loans will come on the banks eventually. But I think we're 6 months to a year ahead of that, and and I know better than anyone else that the market has a very short memory, and definitely not a one-year memory. So that's what it is. And the Nifty Bank has been the performer of the world markets, I think, in the last 2 to 3 weeks. Anuj?
Oh, absolutely. Top of the list. Although I think at par, maybe there's only one market, Indonesia, which has done perhaps a little better. But otherwise, pole position amongst very large markets. Pashupati, hi. Good afternoon.
Hi,
So what have you been doing with your money? Where are you putting it? What are you buying? What have you been selling? Yeah.
Yeah, I've been basically looking at sectors that I think will succeed in this economy. Given that the government is going to be driving spending, I think that the infrastructure space is looking like a place to be. So, steel, cement, infrastructure companies. Again, the country is growing, so logistics is another space. I am not happy so much with IT, and I'm also not so happy with the banking sector. So I've been wrong on that, but I'm the first to admit it. And I just think that interest rates all over the world is going to make funds cost more, and I think that's got a long-term effect. So let's see what happens. I think, but as I said, the market's got an extremely short memory, and right now it's today for tomorrow, and it's 18,000 Nifty and 60,000 Sensex, which is causing a huge sort of exuberance in the retail investor. So, ride that Ghoda, as they say.
Hi, Mr. Advani. Your call on cement is working pretty well. As you mentioned, it looks like you've missed out on banks, but cement has worked. At what stage do you get off?
Yeah.
And from here on, what do you do? Some of these smaller cap names that everyone was shunning away, suddenly it appears they're up for grabs. If they don't get taken, you could be stuck out there. So how do you view the space from here on? Stick to the larger cap names?
Well, I'll tell you, the mid caps have always been trading cheaper than the large caps in terms of value. And now that, the big major multinational has walked away and Adani ji has taken the place, I think there'll be some mergers in the space. So I expect a couple of mid cap cement stocks to probably get a call saying, would you like to be bought out? And they'll probably get nice offers. So that'll probably be good for all of them. I haven't actually looked at which ones, because I think this will be a geographical play. And I think that, one has to do a little more analysis. But I think that anything that's trading cheaper than the valuation that Adani paid for the big stocks is definitely a potential merger candidate, maybe for stock of Holcim or Ambuja.
Pashupati, how are you looking at some of these stocks like, say, PVR? Because there's clearly been debacle after debacle on the box office. Finally, there's been at least one good sort of hit in Brahmastra, but there's been some block deals, etc. as well. But do you like this stock or anything else in this space?
I'll tell you the movie space. Just ask yourself, when's the last time you went to a movie hall? And whereas we used to go maybe once a week, we're now probably going once every 2 months, and that's obviously showing in the whole sector. The reality is that PVR has got a huge institutional holding and has to come down, so they've been lightening up. So that's definitely a reason which is putting pressure on PVR. And don't forget, the other thing is that the major driver for all these movie stocks was not so much the movies, but the extras, the food, the services. So all the stuff was actually driving because on the other hand, the exhibitors were getting less and less from the people who are actually making the movies. So that jagda has been going on. And now with OTT apps coming and OTT apps also beginning to pay, that sector has changed. And we're seeing it in the US, and I guess we'll see it here also, where a lot of people, like in America, Disney Plus, Hotstar, ESPN seems to be the masala that works, which is sports and entertainment, and a mixture. So I think that's probably what's going to come here, and the existing theater halls are probably not going to work. But they do have the advantage that in smaller tier 2 and tier 3 cities, there are independents who are up for grabs and are potentially trading quite cheap, and that's probably a niche opportunity for them to come in. So it's a changing space.
Oh,
not one I'm happy with.
Not one you're happy. Absolutely. I mean, that's the exhibition space, multiplexes, etc. Pashupati, what are your views on the entire home financing space? But before I come to you for a view there, listening to one particular company. This is Home First. It's a small, a mortgage finance company. There's been a lot of buzz that investors are looking to exit, this particular lender. Large private equity players. This is the management, Mr. Vishwanathan, Managing Director and CEO of the company, who's denying any such reports of the PE exiting the company. Listen in, and then I'll come to you on Home First and on the space as well.
We, of course, are not privy to or party to any such discussions. And, I don't think any of the investors are looking to exit the company completely. Of course, we are a listed company, so, there may be changes in shareholding, but, what the article implies that, certain, shareholders are planning to exit the company completely. We deny that entirely. We have True North and GIC, which the combined holding is about 33%. And we have Warburg Pincus, which holds about 29% in the company. And so amongst these four investors, we have True North and Aether, that is GIC. They are the promoters of the company, as classified in SEBI. So these two entities have a certain portion of their shares locked in. So 20% out of the 33 is locked in. So only the balance 13% is available at this point of time. So as per the SEBI norms, for listing, the 20% shareholding is locked in till February of 2024.
Pashupati, any thoughts on the space, not on the particular news here and the denial from the management, mortgage finance? And there are a bunch of these, not very many, but there are a bunch of these smaller mortgage financiers. The thing with mortgage finance is that default rates or slippages, etc., are it's a secure kind of a product. At least that's been the experience here in India. Any thoughts?
So actually, you need to turn the clock back. And, particularly with Warburg, they made a fortune in HDFC. I mean, like an absolute fortune. They were one of the early investors. They made tons and tons and tons of money. So, they said, okay, instead of HDFC, let's go to HFFC. So they moved and they put their investment into that. I think that sector is a bit challenged, because HDFC is no longer there as a buyer to sort of swallow up these small companies and just pick up the books. Like if you take an analogy of this with the US, you've got these small mortgage finance companies that package and sell to the big lenders. That's not happening here because HDFC effectively is out of the market till they do the merger, which I think will take another. I'm guessing it'll happen in the fourth quarter or maybe the first quarter of next year. So that's number one. Number two, you're hearing like Indiabulls Finance has also quietened down, changed hands. And I think there's a lot of angst in the space when companies like this change hands, because I think they're finding a lot of things that they should not be finding. So I agree that it's a stable sector and it's supposed to have good quality loans, but I think that maybe some of these guys have overstepped their mark, and it's only due diligence that's going to actually prove. So again, going back to what you're asking, the number of buyers is much less, and the number of sellers, there's obviously a lot of small companies sitting around in the market. So, there's there. And then, the existing big players like LIC Home Finance and Canfin Homes and the other big ones, those guys are sitting on the fence because, I don't think they've actually done any acquisitions. And, the driver for that has to come from much higher above, and maybe the government will make it happen. But for now, I think that whole sector is kind of quiet. But required. It's definitely a required sector as an infrastructure sector and as a driver for real estate.
Pashupati, the stock of the year has been ITC, and when the year started, it was all about the memes, but tables have turned. Almost 55% rally. What do you make of it, and what's your view here?
Well, everybody was making a gada out of it before, where they were saying, this stock is staying between 200 and 220 or 230 and then back again. Suddenly they started showing good numbers. They're also showing some unlocking capability. It's a surprise to me, but they're actually talking about spinning off the hotels division and also going into what they call 6 bundles or 7 bundles, multi-layer approach, kind of like Maruti's done with cars. Taj and Oberoi have also done in the hotel space, where they've got multi-brands for different parts in the market. So that strategy is paying off. The hidden gem, of course, is the food business, which is growing quietly. But again, I personally don't see a point of unlocking the hotels business away from the main company, because the cigarette business actually is the driver in terms of cash. And okay, it is a little bit, the government could actually take some more excise out of it, but I think the government gets a lot of GST revenue from cigarettes. So I don't think there's much more to tax. So I actually am sort of against the spin-off, but it looks very likely that the hotel spin-off is going to happen.
Okay, all right, Mr. Advani, thanks so much for stopping by and filling us in with your thoughts. Look forward to chatting up with you rather soon.
Thanks, Nigel.
When we were having that chat, the Nifty, tried to pull back a little bit, but that as well has got sold into. So it appears at higher levels today, we are seeing some supply. We're back below that 17,900 odd mark. But now it's a tricky time. The expiry will play out. That's the weekly options expiry. So let's slip into short break. You come back, we'll get our technical guest with us, and we'll also get a check into dealing rooms in our special segment, Btsd Chatter.
Well, the 3 p.m. move actually is playing out a bit, and especially on the Bank Nifty, which is once again gravitating towards the lows. That's the Nifty is below 17,900. 17,900 puts is where you had the highest open interest. So I guess it will be interesting to see if we trade below that for some more time, what happens over there. And of course, if you look at the Bank Nifty, then that also is seeing 41,200 put was the one where we had the highest open interest. Almost 33 lakh shares got added today. As of now, it's trading below that, but let's see if we can reclaim that. We have Btsd Chatter now, of course. Nimesh is going to tell us what he has picked up. Nimesh, been very volatile today.
Been volatile, but again, it looks like it's a day of consolidation. Around this 18,000 level, Nifty is looking to consolidate. But the big feedback today is that there is a big shift towards the old economy stocks today, purely from a flow point of view. So most of the PSU, PSU power stocks, PSU bank stocks are well bid by the larger institutions. In terms of selling, that continues in the technology names. So for second day running, most of the technology stocks are down. Remember, yesterday there was a big downgrade from Goldman Sachs, and they had questioned about the dollar revenue growth. And since then, you're seeing the pressure, large pressure from larger institutions in the technology names. The other big volatility is in the banking stocks. Again, Bank Nifty is been a bit volatile. But again, even there, the feedback is, at least from an investor point of view, investors are looking to buy the dip in the financial names. That's a clear feedback. But the big sector of the day seems to be the tire names. Most of the tire stocks are buzzing today after what C8 managements were gave an outlook to the analysts, and they were very bullish not only on margins but on growth as well. So that had a big rub off on the tire names. But overall the feedback is a day of consolidation, but the focus has shifted to some bit of defensive names in the power space, and investors are looking to still buy the dips in the financial stocks.
Hey, all right, Nimesh, but what about stock-specific action? What are you picking up?
So in terms of individual names, the first stock is Spandana Spurti. It came into my chatter list a few weeks back as well. Again, a big chatter of a large block deal coming very soon. Remember, one of the erstwhile promoter is eventually going to sell out his entire stake. So that entire 14.5% stake could be on the block very soon. So that's the first one. The second stock is the two power stocks, which is PFC and REC. As I said, there is a bit of shift towards the power names, PSU power names, and these two stocks have been well bid today by larger institutions. So the delivery volumes are going to be quite high in all the power stocks today. The third stock is PI Industries. Bit of consolidation there as well. But again, a big chatter of a large block deal coming in PI Industries very soon. So that's something to watch out for. And the last stock is Idfc. Both the Idfc twins, both IDFC First Bank and Idfc have been buzzing off late. Again, in today's set, both the stocks are buzzing in trade. For Idfc specifically, there is a big expectation that the stake sale, which was announced earlier, the regulatory approvals for the AMC business stake sale will happen very soon. So that can have that could be a further step towards eventual reverse merger. But that's the reason why Idfc is buzzing in trade today.
Okay, all right. We'll keep an eye. Those are interesting names as always that Nimesh puts out. Thanks very much, Nimesh, for that. Now Mitesh is back with us with some Btsd trading ideas. Mitesh, what do you have?
So tires clearly have been buzzing, Prashant. So Balkrishna is something, which might play catch up. It's just given the reversal on the hourly charts, up only about 3% compared to the rest of the pack, which is about 5 to 8, 10% higher, and CET is even 15, 20% higher. So Balkrishna is a Btsd. Keep a stop at 2020 here and look for targets of around 2065, 2075 for tomorrow. And the other one is Tata Power. I think that's picking up as well. That's Btsd with the stop just below levels of 242.5 and a target of 250 for tomorrow.
Okay, all right. Thanks for that, Mitesh. By the way, a couple of stocks should be in focus. Reddington, the stock has moved to the high point of the day because Reddington India and Google Cloud, they've entered into a partnership for drive distribution. So an otherwise wobbly market, well, that's seen a bit of a spike up. That's as per PTI reports. The other one is MTAR Tech. I think there was an order win that just came out and it was flashing for you on the screen. And MTAR Tech as well did move up. I think it was a rather large order. So that one as well is still holding with a gain of close to around 4.5% odd. Let's get in Amrish Balika. Hi Amrish, good afternoon. Thanks so much for joining in. There's recent news coming in on Reddington. That's Reddington India and Google Cloud. They've entered into a partnership for drive distribution. Do you track that one? And the other one is MTAR Tech. We had the management a couple of days ago. They're talking about a big growth on the top line and margins as well, scaling back up to around 30%. Any view on any of these two names?
Reddington, I don't really track it so closely, so I'll not really be able to comment on that. But MTAR, yes, I mean, I've been bullish on that for a while, especially after the sort of a correction which we saw in the last 3-4 months. And especially looking at the defense space, the sort of order wins which they've been getting. I mean, not this, but even the recent past. I mean, clearly, I mean, we have a price target of about 2,200 as the first target, and possibly about 2,600 over the next 12 months or so.
MTAR has done really well. Amrish, good afternoon. What's your own stock idea? I mean, what do you have for us? Normally, you give us a mid-cap pick. Yeah.
Yeah.
So what's the pick for
in fact,
the day?
my pick is HDFC. That's an underdog. It's HDFC AMC. It's the largest and, I mean, a profitable among the mutual funds with a quarterly average AUM of about 4.1 lakh crores, which is as of June 2022. And this results in a market share of about 11.1%. In fact, sentiment has been weak for a while for HDFC AMC, and we have seen a decline in the market share in the previous few quarters. We've also seen the poster boy fund manager also quit recently. However, it seems that the effect has already been absorbed in the stock price. And what we saw in Q1 FY23 was that the trend got reversed. I mean, they were losing market share in the earlier 4-5 quarters. But this quarter, they gained about 30 bips quarter on quarter. And even the PAT came at about 314 crores, which is a decently healthy, 32 bips on the AUM. And I believe HDFC AMC will also continue to focus on the new product pipeline with the innovative themes in thematic, passive funds, foreign funds, as well as ETFs in the next few quarters.
And in fact, the company has been concentrating on new avenues of growth, trying to regain market share. And we've seen part of that happening in Q1. And now with the HDFC and HDFC Bank merger, it will become a subsidiary of the bank. So clearly improves the prospects of cross-selling. So overall, it seems that the worst is factored in for the stock, which hasn't really performed except for when we had the announcement of HDFC Bank merger. It moved to about 2,400. But now again, I mean, I have a target of 2,400 over the next possibly 6 to 8 months, looking at 80 rupees EPS for FY24 and giving it about 30x. So like I said, target is 2,400.
Okay, HDFC AMC is something you've liked. I remember you sort of recommended that sometime back as well. So worst seems to be behind and should do well from here. Amrish, any thoughts on the moves that we're seeing in these tire names today?
In fact, I'd also recommended tire stocks. I think about 5-6 months back, Apollo Tires and JK Tire. I mean, clearly was my pick, and we've already got about 50% sort of gains. And at these levels, in fact, I'm booking out to an extent. But then the story is there. I mean, clearly 30 crore vehicles on Indian roads. So replacement market is huge. Margins are easily high there. Input costs are coming down. But I think we should also remember that quite a few of them also have international operations. And that is where I think we could see a bit of a slowdown over the next few months. So at these levels, I think most of the stocks are nearly fully priced. And I would suggest booking profits.
Okay, all right. What do you do with PVR, Amrish? The stock was going well. Unfortunately, a lot of these Bollywood films have not had any success at the box office.
Exactly.
The last one was debatable, but it appears the collections picked up later. However, now we had that large trade today. And the stock is back down to around that 1,850 odd mark. What's your view on the stock price, Amrish? I'm not on the movie.
In fact, I've not even seen the movie, so I really can't comment much on that. But looking at what's happening to most of the movies which have been releasing recently, and I think we had discussed this last week also as far as PVR is concerned, I mean, it seems the best of the run is over for Bollywood as well as these exhibitors. So I think any sort of a bounce which one sees, I think should be utilized to book out. Even at the current levels, I think it's time to book out. Because clearly the OTT platforms have taken over and that's the future. So I don't think the sort of margins which you have seen for these exhibitors will be seen going ahead, at least in the next couple of quarters. So I would surely suggest booking out.
Well, the weekly expiry actually goes to the bears. BPCL has moved to the low point of the day. You have Tata Motors as well that's struggling a little bit, and Sun Pharma as well has moved a little bit lower in the last few minutes. Add to the list something like a Bajaj Auto. Just take a look at the intraday chart on the Nifty. We're moving lower, so I think we are likely to end closer to around that 17,850 odd mark. Good time though to get you some opinion. Earlier today we caught up with Andrew Holland, Chief Executive Officer at Avendus Alternate Strategies, to discuss market technicals, his top sectors, as well as his bets on what he's playing. Let's hear him out.
I've been reflecting on some of the reasons, why we've been seeing this, and one of the things that we talked about before, Prashant, was this kind of whole deflation trade going into next year as the global economy slows, and perhaps investors have taken that in terms of that inflation is peaking at some point over the next quarter. The banking sector will be one of the clear beneficiaries of our economic growth, and it's time to be buying. So I think the momentum will keep it going. And we've said before that the leadership in the banks has changed quite considerably over the past few years because of the different management changes that we've seen. So the pecking order is different than it has been in the past. We've always been more negative on the IT. Well, actually, when we say more negative, we just know it's going to be a hostage to what happens to tech stocks in the US because the correlation at the moment is still very high. It's not a space I need to be. If I'm going to hide, I'm going to hide in FMCG and FMCG and telecom. Actually, if I want to hide anywhere, I don't think IT is the place to hide at the moment.
All right, so that's Andrew with some perspective earlier. The market with just 5 minutes to go is down 130, 135 points. Let's listen to some global opinion as well. Matt Orton is Chief Market Strategist at Carillon Tower Advisors. They are investors in emerging markets like India as well. And EMs is a space that Matt has liked for a while. We spoke with him earlier. Listen in.
It's uncomfortably high inflation data. It doesn't, I don't think, change the long-term outlook I have on markets. Overall, I think that the Fed's 75 basis points is what's going to be on the table. Certainly 100 basis points is now possible, but I don't think that's what the Fed's going to do because at the end of the day, we're even moving 75 basis points is still going to put the Federal Reserve at 75 basis points above the long-term neutral rate. So it's already going to be well into restrictive territory. But the lows that we had in June already impound a lot of this worse new situation. So I don't think we need to necessarily go down to the June lows. We do get a sell-off in Indian markets like we've seen around the rest of the world. That's probably an opportunity to put a little bit more money to work because the longer-term fundamental trends, both from a macro perspective and company-specific perspective, are holding up very well.
All right. Before we wrap up, Amrish, I wanted your take on Delta Corp. The stock is back to the high point of the day. The news that we got in, maybe the GST Council meeting could be postponed a little bit. The stock is flying away. It looked like it's going to come out of the F&O ban as well. That's a technical factor. Any view at around 225 rupees?
In fact, the amount of opposition which is there from the industry as far as GST proposals are concerned, looks like the meeting will keep getting postponed. And I think this will clearly get reflected in the stock price. In fact, even at these levels, I think it's worthwhile. I think I had recommended when it was about 50, 60 rupees lower than where it is today. And in fact, our target price is closer to about 290, 300. So even at the current levels could be bought.
Okay. All right. Amrish, well, that's about Delta Corp spiking up. But we'll have to thank you on that note, Amrish, as well as Mitesh. Thanks so much for joining in and giving us, all of those calls on various stocks. Well, let's wind it down then. The Nifty is ending at the low point of the day. The last tick is likely to be closer to around the day's low. What was losing out today? Some of those global-facing themes, whether it was, IT or metals, both of them did take a sharp knock. You had Hindalco, Infosys, Tech Mahindra, all of them were the top losers. Even Bajaj Auto, which has relatively high amount of export sales, well, that as well was down close to around 2.5%. On the flip side, select other names did pretty well. Domestic-facing themes, Maruti was up close to 2.5%. You had Eicher Motors that was rooming ahead in trade today. And Power Grid as well did pretty well, up close to around 2%. Adani Ports on its way to become a 1,000 rupee stock. What a dream run that stock has had. So pretty good going on that front. From the broader markets, there was a mild outperformance actually that did come in, though the number of stocks that were declining were way more than the number of stocks that were advancing. What did well from the broader markets? Tire stocks. They were really the space to be in. CEAT, the stock was locked in upper limit with a gain of close to around 20%. Joining it was MRF, Apollo Tyres, both of them did pretty well. Delta Corp, well, it ends at the high point of the day, ending with a gain of close to around 6%. And the company that's going to be coming into the Nifty is Adani Enterprises. Well, just take a look at that stock, up close to around 5%. It's had a dream year, more than doubled in this year, up 120%. And today as well, it did move along. Granules India, well, it saw a sharp correction from around 400 all the way to around the 270 odd mark. But that one as well did spike up close to around 4%. Astral as well continues to run along, up close to around 4%. On the flip side, PVR was down 4.5%. Nalco did come in for some selling pressure. Metropolis as well was down 3.5%. And Lotus Labs as well was down close to around 3% or thereabouts. So fair to say that today the buy on dips trade didn't really work out. In fact, if you went to buy that dip, you got stopped out because you ended virtually at the low point of the day. The only glimmer of hope was the mid-cap space, which ended with a gain of close to around 0.3%. So a bit of a pullback day. Expiry day goes to the bears. Well, on that note, though, we'll have to wrap up on this edition of Closing Bell.